Happy Friday, everybody. Welcome to another and this week's final episode of Market Update, where we discuss financial and economic developments through a balanced digest in Europe, Asia, and North America. My name is Tony. Let's jump in. And we begin in North America. US stocks staged a dramatic about-face on Thursday, yesterday, erasing early gains as renewed worries over lofty valuations and the durability of the artificial intelligence boom overshadowed Nvidia Corp's blockbuster earnings. The S&P 500 sank 1.6% after rising as much as 1.4% earlier in the session, marking its largest intraday reversal since April's tariff-driven turmoil. The benchmark is now down 5% from its most recent peak and heading into its worst November since the 2008 global financial crisis. The technology-heavy Nasdaq 100 experienced an even wilder ride, swinging from a 2% morning surge to a 2.4% loss by the close, its lowest level since September. Nvidia, which initially rallied on stronger-than-expected revenue guidance, became the biggest drag on the index as its shares tumbled 3%. The company's spike in accounts receivable, raising questions about how quickly customers are paying for its AI chips, further dented sentiment. Quote, "The Nvidia results, while positive, weren't enough to dispel doubts about whether valuations had gotten too rich," end quote, said an analyst with Wells Fargo Investment Institute today. Other analysts echoed concerns that AI investments may not produce profits fast enough to justify the industry's massive capital spending. Quote, "Is AI going to be profitable as the market is pricing in?" End quote, asked Miller Tabak's Matt Malley, adding, quote, "People are saying I've got to take some chips off the table." End quote. Thursday's rout coincided with the release of delayed US employment data, showing stronger September job growth alongside a higher unemployment rate. Numbers that suggested a stabilizing labor market even as the Federal Reserve remains divided on future rate cuts. Bitcoin's slide to a 6-month low and rising volatility ahead of Friday's $3.1 trillion options expiration added to the jittery mood. By the close, more than $2.7 trillion in equity value had been wiped out. The VIX spiked above 26 for the first time since April, while the Nasdaq 100's volatility gauge jumped above 32. Major tech names including Apple, Microsoft, Alphabet, Tesla, Amazon, and Broadcom each saw swings exceeding $100 billion in market value. Market watchers cited a confluence of anxieties, from crypto's downturn, which has been rather dramatic, and fragile market breadth, to worries about private credit and the sustainability of debt-funded corporate spending. As Northwestern Mutual's Brett Chute put it, investors are confronting, quote, "many unanswered economic and equity market questions." End quote. With more key data due today, Friday, traders appear braced for further turbulence as markets search for direction heading into year-end. Next up, Vietnam is confronting one of its deadliest bouts of flooding in years, with the nationwide death toll rising to 43 after days of torrential rain submerged key regions, disrupted power supplies, and forced tens of thousands from their homes. Government officials said around 61,000 residents have been evacuated, while more than 500,000 people remain without electricity across the central highlands and coastal provinces. The downpour has hit the country's agricultural heartland particularly hard. In Dak Lak, Vietnam's largest coffee-growing province, rainfall has reached an extraordinary 1,792 millimeters, 70 inches, since Sunday, delaying harvesting and raising concerns about global supplies of Robusta, a bean variety in which Vietnam is the world's leading producer. Meteorologists have issued flash flood and landslide warnings for 6 provinces as saturated soils and swollen rivers pose ongoing danger. Tourist centers have also been paralyzed. In Nha Trang, streets and entire city blocks were submerged, leaving hundreds of cars stranded, just weeks after the UNESCO-listed sites of Hue and Hoi An were similarly inundated. I should note that I do not speak Vietnamese, so my apologies if there are issues with the pronunciation. According to the US Climate Prediction Center, Vietnam has recorded at least 270 millimeters more rainfall than historical monthly averages, with above normal precipitation expected to continue into early December. The extreme weather is being driven by a combination of La Niña and the negative Indian Ocean dipole, two climate patterns that typically funnel heavy rain into Southeast Asia. The ASEAN Specialized Meteorological Center forecasts wetter than normal conditions through January. Natural disasters have battered Vietnam throughout 2025. The country has suffered 13 major storms this year, with official data showing 241 deaths. and more than 53.8 trillion dong, or $2 billion in economic damage between January and October. Meanwhile, taking a step back and looking at the broader economy, Vietnam and the United States are pressing ahead with their trade deal implementation. During President Donald Trump's regional visit a few weeks ago, Washington released its first outline of a bilateral framework since announcing a 20% headline tariff on Vietnamese goods in July. Under the proposal, Vietnam would grant broad preferential access to U.S. agricultural and industrial exports, while the U.S. would eliminate tariffs on selected Vietnamese products. Key details, including rules governing transship goods, which could face a 40% tariff, remain unresolved. Despite global uncertainty and painful flooding, Hanoi is targeting 10% economic growth next year after factories accelerated shipments to the US ahead of tariff increases, helping push quarterly growth to 8.2%, the fastest in 3 years. Next up, we have one more development to cover, but just quickly, if you want to continue to be on top of updates like this, the global economic and financial stories shaping our world through grounded and sober analysis, consider subscribing to Market Update. Hit the bell notification icon and you will be. And if you're getting some value from today's episode, don't forget to hit the like button. Next up, and finally for today, we move to Europe. Consumer confidence in the UK has deteriorated sharply ahead of next week's budget, adding pressure on Chancellor Rachel Reeves as she prepares a package of tax increases to plug a widening financial gap. Research firm GfK reported that its closely watched consumer confidence index fell 2 points in November to -19, with all 5 of its sub-indexes covering personal finances, big-ticket spending, and views on the wider economy declining compared with October. Quote, "This is a bleak set of results as we head toward next week's budget," end quote, said Neil Bellamy, Consumer Insights Director at GfK. Quote, "The public is bracing for difficult news with little in the current climate to lift expectations." End quote. Reeves is expected to announce around £20 billion in tax increases on the 26th of November, while adding a further £10 billion in headroom to ensure Labour's self-imposed fiscal rules are not breached. Speculation about personal tax increases has dominated headlines in recent weeks, contributing to heightened anxiety, particularly among middle earners on salaries between £35,000 and £49,000, whose expectations for their own finances and future spending fell steeply in the latest survey. The downbeat mood is echoed by a British retail consortium whose latest sentiment readings showed expectations for the UK economy are at their lowest since April, with retailers heading into the crucial Black Friday and Christmas trading period. Falling confidence poses a fresh threat to profits. Adding to the pessimism is new evidence that Brexit has inflicted far deeper economic damage than previously estimated. A working paper published by the US-based National Bureau of Economic Research, co-authored by senior Bank of England economist Philip Bunn, argues that leaving the EU has cost the UK between 6 and 8% of GDP per capita over the past decade, equivalent to a £180 billion to £240 billion hit. That is nearly double the 4% impact estimated by the Office for Budget Responsibility. The paper links Brexit to weaker productivity, reduced investment, labour market strain, and, quote, reduced innovation, end quote, with effects that have accumulated gradually rather than landing all at once. Its findings come as the OBR prepares a downgrade to productivity assumptions that will account for much of the £20 billion fiscal deterioration Reeves must address with tax hikes. Reeves has increasingly cited Brexit's role in the UK's sluggish growth, echoing Bank of England Governor Andrew Bailey's warning that its drag will persist, quote, for the foreseeable future. End quote. As public dissatisfaction with the economy rises, Labour hopes to reset relations with the EU. But for now, falling confidence and shrinking fiscal space leave the UK bracing for a tough budget and a rough economic road ahead. Okay, that is today's episode of Market Update. Thank you so much everybody for watching. Have a good Friday, have a restful weekend, and I hope to see you for a new week of updates on Monday.